The dollar's rise gains momentum as the Fed signals patience on rate cuts. The dollar flirted with a two-month peak after Fed Chair Powell stuck to his patient approach on rates and offered little insight of when they could be lowered. The greenback is on track for its first monthly gain for the year, so are fears about the currency's demise overblown. Jane Foley is head of FX strategy at Rabobank. So Jane, Powell dimmed expectations for an interest rate cut in September. Could we see the dollar rally continuing as the Fed remains hawkish?
Well, it is interesting that the dollar's rally this week was even when the market thought that the Fed's power could be slightly easier, at least in his indications for the September move. And I think the move that we have seen in the dollar is really about positioning. If you look back to June, for instance, we saw the end of that rotation trade as the US equity markets began a series of new highs, certainly in the S&P 500, and yet the dollar remained largely on the back foot, perhaps because the market did anticipate an easier tone from the Fed. So I think there were, or it was due to have some short covering in favor of the dollar. After all, a lot of the factors that created the pressure on US asset stocks and the dollar early in the year have been a little bit downgraded. No one expects the US economy to enter recession anymore, for instance. And I think the dollar has certainly begun to find its feet. But it could still be another story next year.
Let's turn now to tariffs, and the initial impression is that the US is the one that's got the upper hand in trade talks. Do you agree?
Well, certainly when you look at the EU-US trade deal, it does seem to be the consensus that has come out of a lot of the commentary that we've seen. In terms of what the market had hoped, or at least what exporters had hoped 6 or so months ago, then yes, this is not an advantageous position for exporters from Europe, or indeed from Japan or South Korea for that stage. But I suppose that we could look back to April and think, well, at least we don't have those larger tariffs that Trump had talked about then. But for certain, I think if we look at some of the headwinds that would be facing exporters in countries like Japan, South Korea, and the EU, all very significant exporters to the US, well, yes, there will be a drag. And for Europe in particular, when you consider there are tariffs, there are still high energy costs, some labor market constraints for some industries, but also perhaps a stronger euro, maybe than many people had anticipated at the start of the year. Those will all act as a headwind, and therefore it does provide a dose of reality to the optimism, really, that had spurred the euro this year.
It's no secret that a weaker dollar is a constant aim of the current US administration. So what tactics can they use now that trade deals have been finalised?
Well, I mean, I think many people are anticipating or hoping that the focus will fall off trade, but I do think that this is going to remain very much in the headlines because there's a lot of vagueness in some of these trade deals. There are still parts of these trade negotiations where one party doesn't necessarily agree with the other party in terms of what was included. In France, for instance, you still have pressure to have extra or more concessions for champagne, for some spirits, for instance. And in the area of energy tariffs, or energy investment rather, purchases from the US, there's a lot of confusion about how the numbers that we've seen cited over the last couple of weeks will actually be put into practice. So I think trade is going to remain an issue. And of course, if Donald Trump really does want the dollar to weaken, I think he's going to continue his pressure on the Federal Reserve.
You did mention the fragility of the euro, Jane. Could you see a fall even further, as low as 113 versus the dollar?
I don't think we can rule that out. I mean, if we look at the euro's perspective right now, the dollar perspective aside, well, we saw the euro really gathering an awful lot of support really from March, and that is related to the loosening of Germany's debt brake and all of the optimism that spurred. But actually, if we consider the headwinds that still are facing the German economy, the eurozone Eurozone economy. If we look at the expectations for growth, for instance, in Germany, economists have been saying all the time that German growth this year will retain a stagnationary feel, that it's going to be very weak, and perhaps only next year we're going to see some of that spur to growth that the market seems to have priced in this spring. And I think from that point of view, we could certainly see the sort of deflating of the bubble, if you like, that we've seen in the euro uh, uh, go a little bit further. But it is our expectation that the ECB are likely to have bottomed in terms of their interest rate cycle. The Fed may have further to run, and that means in 2026 you could still have another round of dollar weakness versus the euro.
That was Jane Foley of Rabobank. Don't forget, you can watch more videos on Reuters.com.